Hello everyone. In this video you will learn about what is adjusting entries and what are the types of adjusting entries and also how to do the adjusting entries. But before that, let me introduce myself first. I'm Lovely de la Peña and now we're going to tackle about what is adjusting entries. Adjusting entries are journal entries are to be recorded in general journal and are usually prepared at the end of accounting period of a 1 year following preparation of a trial balance. Do you know what is the purpose of adjusting entries? Okay, let me share about what is the purpose of adjusting entries. The purpose of adjusting entries is to correct the financial statement which are truly, or we call this test method. After knowing what is adjusting entries, let's define what are the different types of adjusting entries. The first one is accruals and the second one is deferral. Amount of money that have been earned or spent but not yet paid. For example, if a company provides a service to a customer in December but does not receive a payment until January of the following year, the revenue from the service would be recorded as an accrual in December when it was earned. In accruals, there are two accrued, the accrued income and the accrued expense. The accrued income is that has been earned but has yet to be received. For example, of accrued income can be include wage earned but not yet paid, rent earned but not yet paid, and interest earned but not yet bond yet to receive. While the accrued expense is that the business incurs but hasn't yet paid. For example, utilities used for the month of an invoice has yet been received before the end of the period of wage that incurred but payments have been yet to made the employees. Second type of adjusting entries is deferrals. Deferrals is account for expense that has been prepaid or early receipt of revenues. In deferrals, there are two types also, pre-collection income and prepayment of expense. Before we tackle what is pre-collection of income and prepayment expense, let me give example of deferrals. Example of deferrals such as quarterly rent payments received in advance by a property owner, deferred revenue and annual insurance premiums paid in advance by the insured, deferred pre-collection of income is being repaired or earned by the company but pay the customer in advance. Also, there are two types of method of pre-collection of income, the income method and the liability method. In the income method is that created upon collection of receipt of cash, or we call this nominal approach. Then, while the liability method is account credited about collection or receipt of cash, or we call this real approach. And now, what is the prepayment of expense? Prepayment of expense is that has been paid for advance but not incurred. Payment of expense, there are two methods also, the expense method and the asset method. In expense method, this is method or approach and expense account is debited on a containment of the prepaid expense, while the asset method is an asset accounts debited about the amount of a prepaid expense is with the goals of cultural approach as an asset in a balance sheet. And now, we already know what are the different types of adjusting entries and what are the components and types. And now, I'll show you how to prepare your adjusting entries. The first one is record your accrued revenue. The second one is to record your accrued expense. The third one is record your deferred revenue. The fourth one is record your prepaid expense. And lastly, record your depreciation expenses. And step 1, anytime that you perform a service and have to been able to invoice your customer, you will need to record the amount of revenue and earn as accrued revenue. For example, John owns cleaning service. He bills his client for a month of services at the beginning of the following month. His bills for January is $2,000, but since he won't be billing until February 1, he will have to make an adjusting entry to accrue the $2,000 in revenue he earned for the month of January. Once John bills his client in February, he will have to make the following entry. Step 2. Payroll is the most common expense that will need an adjusting entry at the end of the month, particularly if you pay your employees bi-weekly. Any hours worked in the current month of that will not be paid until the following month must be accrued as an expense. Here is the journal entry for recording accrued payroll expenses. 3. If your business typically receives payment from customers in advance, you will have a deferred revenue until it's earned. For example, your businesses offer security services. One of your customers pay you $3,000 in advance for 6 months of services. Since the revenue has not yet been earned, it has to be deferred. Here are the journal entry for recording the initial payment. For the next 6 months, you will need to record $500 in revenue until the deferred revenue balance is zero. Step 4. Prepaid expenses are handled like deferred revenue. For instance, you decide to prepay your rent for the year, writing a check for $12,000 to your landlord that covers rent for the entire year. Since you don't want to take $12,000 expenses in January, you will place the $12,000 in a prepaid rent account and expense in each month for the next 12 months. Your initial journal entry would like this. Step 5. Anytime you purchase a big ticket item, you should always be recording accumulated depreciation and your monthly depreciation expense. Most small business owners choose straight line depreciation to depreciate fixed assets since it's the easiest method to track. For instance, if you purchase an item for $5,000 with a useful life of 5 years and salvage value of $1,000, you can depreciate the asset for 5 years. Based on the number of years that asset will last, making your monthly depreciation total is $66.67 per month for 5 years. To record depreciation, your journal entry will be like this. This journal entry can be recording as your depreciation expense will not change for the next 60 months unless the asset is sold. That's all for the adjusting entries. Thank you.